Carl Icahn. So he was chugging along. Shares were $52. And in April, we had unusual option activity. And when we have unusual option activity, Pete and I don't just talk about it, we trade it. So in this one, IEP, as you can see, if you look at that top chart there, that's showing directly from our blog in April that they were buying these puts, the January 45 puts. And take a look where the stock was, over $52 a share. Now, flash today, it traded down to $28.30. I put out a video, Pete, for the doctor's prescription that your wife named for us. I put out a prescription that said, guys, don't be pigs, roll down. From 52 down to 28.30, you got to take it off the table, roll down. If you still think that Hindenburg, because this is because of Hindenburg research, if you still think they're right, fine, but take money off the table. Pigs get slaughtered, and you don't want to be a pig. So that's my advice, Pete. And so far it's working out because the stock's rebounded almost $4 off the low.
Yeah. And I'll tell you this, John, I mean, you're talking about discipline. That's what we talk about all the time, particularly in the options world where you've got to have discipline because there is a time frame. There's a lot of different things that are constraints. Obviously, you do get the leverage, though, and the leverage there, you were talking about 10 X's the other day. I'm thinking there's quite a few X's in this one as well, John, to the downside, and they've made that money. It's been a fantastic trade. I'll say this, too. When you look at Hindenburg, John, that's a short seller. They're an activist. That's what they do. They actually use the words Ponzi-like, which is a very, very interesting thing. I don't think a lot of people want to say it. I didn't say it. I'm just repeating what they said. And it's an interesting thing. It's an interesting quote. I'll tell you what, when you see all this money that's sloshing around and some of the different things that are going in terms of dividends and all the rest of it and how that's all been, the numbers are working within IEP. I'll tell you what, John, I think rolling out of what you've made money on, but it doesn't mean that you need to be done. I think there are ways to maybe try to position yourself to still compete, maybe to the downside. I know we've got a little bit of rally off the lows. I think that might be an opportunity because things might not be all that rosy in the future for this name.
Yeah, got to think so because Hindenburg, my hat's off to them. They do a great job, Pete, with just like Citron. A lot of people mistakenly just think that a short seller is just trying to talk their book. There are few things tougher than being a short seller and then having the whole rest of the world that's long come and fight you. But if you make the good argument and you have some solid evidence behind you, people tend to say, well, at the very least, I'm getting out of my longs here. Maybe I've never traded a short. And of course, Pete and I have with puts. But if you've never traded a short, it can be scary. So it's not like everybody can just go out and be this great short seller. You've got to do your homework. And apparently, even Carl is thinking that things are a little tough for his IEP right now.
Yep.
Want more from Market Rebellion? Don't forget to like and subscribe and learn more about options trading at marketrebellion.com.